What a freaking day in the stock market today, guys. Oh my goodness, do we got a lot to break down this video. We have to break down the market, stocks, earnings, what I'm looking to do. So before we do that, make sure to join my Patreon and get yourself some free money from Moomoo. You get one free share of NEO guaranteed and up to 5 other stocks, each of which could be valid up to $3,500. Just deposit at least $100 into the Moomoo account and boom, you get your free money. That and the Patreon are linked down below. And with that being said, let's dive into the video. So check this out, guys. Markets closed almost 1 hour ago. We had the S&P 500 close up 1.1%, Russell up 1.1 as well, NASDAQ up almost 2% as the Dow went up 0.7, and we had the VIX down 2.5%, gold down 0.5%, and silver down about 1.7% on the day. And this was a fantastic day all across the board, especially when it comes to SPY. The fact that it closed over 447, 448, and it almost closed above 450. That is a very, very good sign overall for the bulls. So let's break that down. So as you guys should know at this point, at least if you've been watching my channel, and if you haven't been watching my channel, what are you doing? Make sure to subscribe so you don't miss any of the content, right? So if you've been watching my channel, you know 447, 448 has been a big level that I've been watching. That was resistance from the middle of February. And another big level I've been watching is 448. 448 was the double top that we saw in February before dumping very aggressively from about 458 to 410, which ended up being a drop of over 11, almost 11, over 10%. So the fact that we're now breaking out of 447, 448, we closed above it, that is a very good sign that SPY is building up momentum to then fill the gap to about 458, which means from where we are now, there could be about 1.5%, maybe 2% more upside if it goes to 458. And if you guys are looking at this chart, you'll be able to realize if we break 458, there's literally no resistances until the mid 470s. We could be ripping all the way near those all-time highs. Now, I don't want to get ahead of myself because we're not there yet. We're not even at 458 yet. But if we do break 458 in the next couple of weeks, months, who knows, the next Fed meeting is in May. Maybe we do go to 458 plus before May, before that next meeting. If that happens, again, we break 458, boom, 470, 475 is not too far-fetched. And when it comes to Triple Q, which tracks the NASDAQ 100, let's see what this is doing. Triple Q ended up breaking out of 355 and 350 today, which both of those were big levels of resistance. And the fact that we took not one, but both of them out today, that's fantastic. And you guys can see we closed above 357. So by the looks of it, this is also breaking out, and on top of that, it's above both moving averages, as you guys should know at this point on the 4-hour chart here. So this looks like it's gaining steam towards 365, 370, and if we break 370, that is where we could get an even bigger push before maybe the May meeting. I don't know. I'm just making things up here, guys. Overall, that's where we could get a big push over the next couple of weeks, right? Maybe the next month, 2 months. So that's a quick breakdown of what the markets are looking like right now. Let me know your thoughts down below in the comments, and if you haven't done so already, make sure to smash that like button. And with that being said, let's talk about some stocks here, a couple of which reported earnings today, 3 of which did. We're going to break those down in the beginning of this video. Number 1 is Adobe, ticker symbol ADB. So let's see what this one's doing here after market hours, as they did close up almost 3% on the day. They closed at 466, and now after market hours, it's volatile. Holy crap. Look at that, guys. It went from 466 to 470. Little slight pop right after the bell. And then it ended up tanking all the way down to 441, which was a drop of 6%. That's a pretty big drop. And then it saw a V-shaped recovery. Now we're back to 464. Pretty much right a little bit under where we closed about 50 minutes ago. So Adobe's very rocky after market hours here. Let's see exactly what they ended up reporting. It looks here like they did $3.37 of EPS versus $3.34 estimated. Sales came in at $4.26 billion versus $4.24 billion estimated. So nice slight double beat for Adobe when it comes to Q1 EPS and revenue. And when it comes to the next quarter, in this case being Q2, they see revenue at about $4.34 billion. Adjusted EPS, or actually that might not be adjusted. Unadjusted EPS is $2.44 for Q2, And adjusted EPS is $3.30 when it comes to that guidance, and I'm not too sure what the estimate was. Actually, let's see here. It says Q1 digital media revenue at $3.11 billion versus the estimate of $3.1. That's for the previous quarter. And digital experience revenue of $1.06 billion versus $1.05 billion. So the individual segments here, they beat the estimates for revenue when it comes to the previous quarter. That's great. And they guide for Q2 EPS adjusted, like I said, of about $3.3, which is under the $3.35 estimate. So overall, I would say a pretty decent report. It's not like it's a blowout quarter where they're crushing the estimates, and it's not like they're missing wildly either. You know, it's not a great quarter, but it's not a terrible quarter. It's kind of right in the middle of the road. And because this is a stock that I do not own yet, I do want to buy it at some point. I probably am going to listen to the earnings call, which is probably right now or in the very short term here. I'm going to listen to that earnings call and see what they're saying, guidance, what they're looking at for the next couple of quarters, next year, and we'll take it from there. You know, I'll do more research on it. I've kind of done a lot of research on it already. I'm just waiting for the price to be right at this point. Like I've mentioned in previous videos, I would love Adobe to be down to 300 a share, 350. That is where I would heavily consider buying the stock. So currently my alert is set at 475. So if we break out this point being the resistance from a couple of weeks ago and the 180 SMA on this 4-hour chart, if we break out of here, maybe I'll trade it, you know, a short-term trade. But again, as a long-term investment, I've said this many times, and I just said it a minute ago, I want it 300 to 350, preferably even lower, so we got to be patient. Stock number 2 is PAYS, and although I do not cover penny stocks on this video, I'm not one of these scumbag YouTube penny stock pumpers. You guys probably know that already. Most of the stocks I talk about are multi-billion dollar companies plus, for the most part. I'm not pumping stocks here like some scumbags do on YouTube. So this is unlike me, but we're going to talk a little bit about Paysign in this video, PAYS, because they just reported earnings and the stock on the day went up 9% and closed at 250, and now after hours it does seem like it is down about 20 cents, which for a penny stock of $2.50, that's a pretty big move. We're talking 8, 9, 10% down after market hours. Oh, now it's spiking back slightly. So let's see what they're doing. Let's see what they're doing here for EPS. Looks like they did. Oh, wow. They did Q4 EPS of 0 cents. Literally 0 cents. Talk about break even. That's what they just reported. They did sales. Let's see here. Sales. Why am I not seeing? Oh, there they are. $8.8 million of revenue. So this is a very small company. I'm assuming their market cap. Geez, guys, let's not pump this. Let's not pump this, guys. This market cap might be like 10 million, not 10 million, 100 million. Let's see here. PAYS. And I'm obviously kidding, guys. We're not pumping this stock. Yeah, the market cap's 129 million. Look at that. This is a stock that could probably at the end of the day be pumped by if somebody like Meet Kevin bought it or something, or if Jeremy bought it or one of the big YouTubers. If they bought it, this is the type of stock that at the end of the day could be pumped. But obviously that's not what we do here on this channel. We are not by any stretch of the imagination pumping stocks, but the reality of the matter is people do pump stocks, so you got to be careful out there. But that's not what I do, obviously. So now that we got that out of the way, again, they did 0 cents EPS, 8.8 million in revenue, and let's see the guidance here. They see full year 22 revenue of about $35 to $38 million versus the $39.6 million estimate. So the full year 22 sales is a decent chunk under the estimate, which is not always the best. And let's see here, EBITDA per share adjusted, it actually came in at 2 cents, up from 1 cent year over year. And EPS up from -9 cents year over year. I guess that's unadjusted. And here it does say they missed sales, 8.8 million. Like I mentioned earlier, they missed it. It was 9 million estimated. So not the best report from Paysign. The stock is moving down about 20 cents after market hours. And what we're noticing here on the 4-hour chart, technically speaking, even though the stock is down, it is still holding above both moving averages. And we're noticing an ascending triangle. We can see it's been making higher lows since the middle end of December, clearly. and we've seen resistance at about 250 since the beginning of February, about a month and a half. So in my opinion, if this plays out, the ascending triangle plays out and we take out 250, which I should put my alert at 250 right now, if we break out of that level, this could end up filling the gap to $3, which was the high point. Let's see here, from the end of October, early November. So set your alerts, be patient, and as always, when it comes to penny stocks, guys, be very freaking careful. These could go down 50% just as quick as they go up 50%. And typically, they go down way faster than they go up, and that's all stocks for the most part in general, right? You guys know that. So PAYS, watch out for it. CCL is another one that I'm looking at. They reported earnings this morning. They did not do that well. Adjusted EPS for Q1 came in at negative $1.66 versus negative 89 cents. Estimated revenue came in at $1.62 billion. Get ready for this, guys, versus the $2.3 billion estimate. So very ugly miss on EPS and on revenue, and the stock pretty much didn't even budge today. It went down 0.1%. And if we take a look here based on the 4-hour chart, it is still down about from $27 to now $18-19. It is still down 30% from all-time, or actually not even, all-time highs are not even near $27, guys. If we're talking all-time highs, this stock's down even more. But 27 was the high from September. It is down 30% from that high, let alone the all-time highs, which were hit at $72 in 2018. This stock is down probably 75% from all-time highs. So it's still very ugly. It's still down a bunch. And the fact that it's not moving down after this horrible earnings report is telling me that a lot of this is already priced in. That's just the reality of the matter here, guys. A lot of this is already priced in. Investors know that these quarters coming up are not going to be good. So we get the horrible results. They're not surprised, which is why the stock is not budging. So for this one, I have my alert set at about, where is it here? $20, which if it breaks $20 right by the 180 moving average here, maybe we start making a move towards 23, 24. That was resistance from the middle of January, also early middle February. So that's it. I'm putting my alert at 20. I'm not watching this, or, well, I guess I'm watching it, but I'm not touching it until it gets over $20 a share. So the next two stocks here, which I'm not going to say I told you so, but I told you so. GameStop and AMC. And I'm not saying that I called out the rip today or yesterday. I was like, oh, tomorrow AMC and GameStop are going to rip. I'm not saying anything like that. But what I have said many times in the past is these stocks could catch on fire at any moment for no reason at all. And that's kind of what we saw today. GameStop ended up going up almost 31% on the day, up $29 a share, completely ripping out of the moving averages on the 4-hour chart. And now from the $75 low that we just hit 3 trading days ago, we are up 65% from $75 to now being roughly at $123. And earlier in the day, this stock was up even more. It was at $125, and it closed on a very bullish note. Very green. Obviously, it was green, but it closed. It's not like we had a very green morning and then we dumped heading into the close. This thing was green all day. It was ripping all day. Bulls were dominating all day. And that's a very good sign. And like I said, I'm not tooting my own horn here. I'm not saying, oh, I called this out yesterday, because nobody can call this kind of crap out, guys. But you got to realize this can happen at any moment. The stock is still one of those meme stocks. It still has a decent short interest. I think right around 18% short interest. So this took off 31% today. I'm going to set my alert at 130. If we break 130 being the high from the past couple of weeks, this might be flying even more, guys. Never underestimate a stock like GameStop and AMC. Today, AMC went up a whopping 15%. Not as much as GameStop, but still, guys, this thing is now up from $12.90 a couple of days ago. Now it's at $18.30. It's up 45% in the past couple of trading days. Fantastic move. It's up above both moving averages, and overall, yes, it's still in a downtrend, but if we start building momentum out of 20, 21 bucks a share, the resistance over the past couple of months since the beginning of 2022. Hence why I have my alert at 21 bucks, guys. If we start breaking out of there, this could really start moving quick. And let me make this clear. I don't think AMC and GameStop are going to necessarily go to all-time highs again. That's a bit crazy, but could they run, let's say, AMC from 18 to 25, 30 bucks? Yes. Could GameStop run from where it is now being around 125? Could it run to 150, 160, 170? You bet your you know what. So make sure you guys watch out for GameStop and AMC and understand the risks involved, and obviously keep in mind there's a lot of upside involved as well, or there's a lot of potential gain involved, but of course, again, a lot of risk as well. So the next one I want to talk about very briefly is ZIM, Zim Integrated Shipping Services. This is a company that is crushing it right now due to the whole supply chain, all the craziness going on, shipping and so forth, right? They are doing very well. They've increased their dividend like crazy over the past couple of quarters. In fact, they just paid a $17 dividend today, which is why the stock, if you guys take a look here, went from $91 a share to $74 a share today. I mean, I guess it was 91 bucks a couple days ago, but today, this morning, it was around 88, 90 bucks, and it went down all the way to 72, 73 bucks. And what you guys have to realize is, usually when companies pay a dividend, the day they pay the dividend, the stock goes down that amount, right? So in this case, ZIM, $17 dividend, it pretty much went down 17 bucks today as they paid the dividend, and usually, not always, but a good amount of time, right, the stock ends up recovering after it goes down the amount of the dividend that was paid that day. And you guys can see we went down 17 bucks, and now we're slowly recovering. The stock did bounce about 4, 5, 6 bucks intraday off of that intraday low. So in the grand scheme of things, even though I'm a bit skeptical about ZIM, I would put my life savings on it. Well, I don't want to go that far. Screw it. I'll go that far. I'll put my life savings on it. If ZIM is still paying a 17, 20, 25, if it goes up to that much, who knows? If they're still paying an exorbitant amount of money in dividends in 2-3 years, I'll burn my life savings, right? I'll just go make a YouTube video, cash out of everything, and burn everything in front of you guys. That's how confident I am that ZIM is not going to keep this up. This is a very short-term thing, very short-term dividend hike, and when everything goes back to normal, give it a year, 2 years, whatever. I think ZIM is going to come back to its intrinsic value, which, in all honesty, I think is a lot lower from where it is right now. Let's just put it that way. And that's kind of what I covered in my video. If you guys didn't know, I made a whole video on ZIM a few months ago. That's what I talked about, and I still believe that today, even though the stock is up more from where I made that video. I think when I made that video, it was around 60, 55, 60 bucks. Now it's a lot higher, and I just think it's a short-term thing, and I could be wrong, but that's my opinion, and I'm not going to, make a long-term investment in this. There's no way, but as a trade, I'm looking at it. As you all can see, the uptrend's beautiful. We just hit 91. We pulled back, shook out some weak hands, got the dividend out of the way. Now we might see a rally after this dividend payment, which came out today. Or was it yesterday? Let me double check. Yeah, that was today, obviously. Today. So, yeah, ZIM, watch out. Watch out for a bounce. If it goes back over 80, this could gain some momentum very quickly. And the last one for today, make sure you guys smash the like button and subscribe if you haven't done so already. And drop me a comment and let me know if you guys stuck till the end here. The last one for today is none other than Tesla. And what did we say, guys? What did we say? I'm not trying to toot my own horn, but Tesla, I mentioned, hey, if we break out of this downwards channel, we were already showing momentum out of the moving averages, but if we fully broke out of the channel, which now we did, it was going to catch fire and probably go back to 1,000, 1050. I literally said that maybe yesterday or the day before, guys. If you watch my videos, you know what I'm talking about, right? So that's what happened. Today it blew up. It blew up 9% or 8%, not 9%. Almost 8% on the day, up 72 bucks. And now Tesla's knocking on the door of 1,000 bucks. Tesla's like, hey, 1,000. We're here. Knock, knock, knock. We're here. And although it is a bit overbought, RSI screaming red on the 4-hour chart. It's at about 80. If this pulls back just a little bit, I wouldn't be surprised if buyers bid it up again. bought up the stock, and we go over 1,000, 1050. That's where I think it could be going. And if we do get a bit stretched, we hit that 1050, 1100, that is where I'd be careful. I think at that point, selling pressure will kick in to shove this thing back down, maybe even under 1,000 again. So watch out for the momentum building up on Tesla here. And if the markets continue trucking on along like they have been, this will probably continue. And with that being said, guys, that's it. I hope you all enjoyed the video. If you did, hit the like button, subscribe, drop me a comment, and feel free to join my Patreon if you want to keep up with all my buy, sells, call outs, morning videos every morning. Throughout the week here, I make morning update videos only for my Patreon members. And again, you get to keep up with all my moves. If that's something you're interested in, check out my Patreon link down below, or go to stocksrfs.com/Patreon to join. And don't forget to get some free money. You get 1 free share of NEO guaranteed, and up to 5 other stocks, each of which could be valued up to $3,500. Using that Moomoo link down below, all you have to do is deposit at least $100, and boom, you get your free money. Get that again from Moomoo, link down below, or go to stocksrfs.com/Moomoo. I'll catch you guys in the next video. Thanks for watching as always. Peace out.